Welcome to Financial Issues, where we help you steward faithfully by honoring God with your investments. Now listen in as we give you the practical tools and advice you need to become a biblically responsible investor.
This is Financial Issues, where we help you defund darkness and fund the light by investing with biblical integrity. Welcome, everyone, to the show. It's great to be here with you. Seth Udinski, Samuel Case, and your host, Mark Minnella. Mark, I'm excited, brother. Hope you had a great weekend.
Yeah. Good morning. Welcome to Monday, everyone. Glad you're with us today as we start another opportunity to grow closer to Christ through our finances instead of despite them like the rest of the world. So glad you're with us, and I'm looking forward to a whole hour together.
Yeah, it's going to be a great time. And, you know, folks, we're looking forward to talking to you as well. The way to do that is to call in. We got our phone lines wide open right now. Call in now. Be the first caller of the week. You can do that right now at 610-363-1110 if you've got questions.
Before we start, guys,
Yes,
Mark, I got to say, I love the Johnny Cash look today. The man in black, looking slick.
Oh, my goodness.
Right.
Oh, okay, look at you.
It, Sam.
Look at you.
I know. I missed out on the slim black
memo
shirts today, guys. That's
yeah,
right.
you missed the memo.
Yeah, well, it is reflective of the most handsome guys on the show. So Mark and Sam, well done, boys. 610. If you want to talk to two of the handsomest guys out there, Mark and Sam, and then another guy who's hanging out with them, me, 610-363-1110. That's the way to do it. 610-363-1110. You know, guys, interestingly enough, Trump's tariffs have been a big question this year, really since the beginning of his administration. We'd love to hear your opinion on it, folks. What do you think of the Trump tariffs? You like them, don't like them? Let us know. 610-363-1110. But before we get to all that, guys, I think it'd be a good idea for us to just take a look back last week at what the major indices did. Mark, I'd love to hear your thoughts on this. On Friday, they capped off a pretty chaotic week mixed. So the Dow Jones finished about 0.65% negative. The S&P 500 was basically flatline, and the Nasdaq was slightly positive. For the week, I'm seeing the Dow Jones was up about 1/3 of a percentage point. The S&P 500 finished about flatlined, and the Nasdaq bled the most. It was down about 0.5%. Mark, let's just kick it off here. What do you make of what happened last week, particularly as the news cycle seemed to be dominated by some doom and gloom when it came to the tech and the AI drop? What do you make of that?
Yeah, you know, it felt like the week felt much uglier than it really was. Bottom line is, at the end of Friday, I think a lot of people left the markets with, wow, what a terrible week. But the reality was, it wasn't that bad of a week. We did see tech, we did see AI pulling back, which it really needed to do because it is well overbought right now, and the valuations are way much too high. When we see companies in the 300s or the 200s, they're definitely way too high. So it was good that they were pulling back. But we did also see some positive stuff. We saw some stuff like energy and medical rotate in and rotate up. So that was good too. So we're seeing the market maybe balance out a little more. I looked at the bell curve of the general market and the different sectors and whatnot, and it has moved just a little bit to the left of center, which means that overall, we're in a pretty good position. There's still some things out front that are way over, you know, the line, that are still way overvalued. But so we got to be careful what we're buying into. That's why I keep telling everybody at this point in time in the market, we really want to be careful what we're buying into. We don't know where the market's going. It's still trying to sort itself out. We see institutional buyers maybe divesting a bit of AI and technology to spread out a little bit stronger. We see some large people like Buffett and others, investors that are starting to hoard a little more cash than we normally see. So they're seeing the risk in the market too. Now, it doesn't mean we're anticipating any crash, but obviously there will be corrections like last week. I think last week left most people feeling like it was a terrible market last week, but the reality, it really wasn't, especially if you have a good diversified portfolio. If you're not just following a single trend like AI or some tech stocks, or you just have 50% of your portfolio in one little sector. For those of us who have been diversified, we actually saw a decent week. Nothing big, nothing bad, real bad, but a decent week overall. So that just kind of helps us to understand why, or may help someone understand why we do what we do, why we talk about diversity to help take some of the dips and the valleys and the peaks off there to make the ride a little bit smoother and hopefully upwards more often than not. It also helps us to understand that at any time, any sector could, especially with the bot trading that goes on, and especially with the institutional traders, when they start to panic, it's too late. You're already going to be caught in it. You're already going to take a big hit in it if you haven't diversified well. So be careful with that. Check your diversification coming up near the end of the year. I don't know when you do it, but obviously we're doing it weekly. We're looking at everything that's on our buy list and the hold list and looking for new buys and things like that. But this is a good time of year, because you're going to get busy with Christmas, and you're going to get busy with Thanksgiving, and you're going to get busy with New Year's, and all that's going to keep you from being portfolio focused. So now's a good time to rebalance that portfolio. And maybe as you're doing it, as we talked about over the last, month or so, the idea of some of the weak and negative returns for the years, tax loss harvesting those if you don't believe they're going to have a good month or two following you selling them off. Remember, we only want to sell those off for tax loss harvest that we don't believe have a short-term positive possibility. We want those that we believe are going to just hang out down there or go lower. So when it comes to tax loss harvesting, what I'm saying is tax loss harvesting is just like, it's just straightforward. It's part of your normal portfolio maintenance this time of year. You look at it, you see you have some deadbeats in there that haven't done anything, don't look like they're turning around, and we haven't said that they're not. So you might want to just go ahead and sell them off, realizing if they do turn around, if we're all wrong with it, they're still on the buy list or they're on the hold list. If they do turn around, you can turn around in 30 days and buy back into. It's not panic time. It's just realizing the markets are spreading out, and that's a good thing. It looks like it actually looks like they're starting to take a little bit of direction, and that direction is to be well diversified. There's my 2 cents, Seth.
Mark, that's great. No, I'm glad you said that for 2 reasons. One, to help us realize what actually happened last week, because I'll even admit also, when I'm looking at the news headlines, I'm thinking, oh my goodness, the sky's fallen. But then what you're telling me and what I'm seeing with the numbers, you're
Next
exactly
week,
right.
we're going to be living in Mad Max, right,
absolutely.
Seth? It's going to be the end of the world.
Stuff. But no, seriously, I mean, the Nasdaq, the tech-heavy Nasdaq only dropped 0.5% last week, Mark. I think we had one day that was real bad, and then everyone went crazy. But no, you're exactly right, Mark. It helps us to realize, okay, all's good, we're all fine. And also, Mark, I think this is important too, when we're seeing, and tell me if I'm wrong here, what you're describing seems to be a positive direction of strength for the market, where it's kind of realizing, I guess, more reality than just fantasy land of everything being overvalued and everything being hunky-dory. Am I correct in that?
Yeah, actually things are shifting. Yeah, we're seeing technology take a little cream off the top right now. Nothing big at this time. And we're seeing other areas starting to just drop in. And that's really nice to see the medical side, the biomed and the hospitals and things like that to move a little bit stronger in their trend. We're also seeing energy. We're seeing several utilities. We're seeing several things shifting. And what that means is, instead of it, just being a peak here of all technology, we're seeing it flatten out a little bit and widen out, and that's good. We need more sectors to be taken over, or if not taken over, just strengthening. The sectors could maintain their dominance. Tech I believe will maintain its dominance, but we see other sectors strengthening, and technology coming down. It gives a more balanced market, and we'll see how things go. But it does. The thing that the 3 pillars of stewardship, one of them is inner peace. Inner peace means we find peace even in the chaos. That's the neat thing about financial issues, is our investors and our philosophy isn't just to make more money, though that is why we invest, is to take God's resources and make the most of the froth that he has given us. But it's also to maintain that peace no matter what's going on. By having a diversified portfolio, by maintaining that, realizing that God's in control, not the markets, not the government, not the Federal Reserve, we have peace. Excuse me. We have peace. And that peace allows us to continue forward, to enjoy the holidays, no matter what the markets are doing, because we know God's got this. And that's what the rest of the world doesn't have. That's what the rest of the investment community doesn't have, like you and I have.
It's awesome. Peace that passes understanding, and it is a promise that that's what Jesus gives us. We should apply it to every area, especially our stewardship. It's good stuff, Mark. Hey, folks, join the conversation. Do you agree with Mark said? We want to hear from you. 610-363-1110. Again, 610-363-1110. Call in right now. We'll get to you on this Monday morning. Good to be here with you all on Financial Issues. We'll be right back after this.
Navigating through investment options can be challenging, especially when you're determined to uphold your God-given values. Every dollar you invest is a vote for the world that you want to live in. Let your values guide your investment decisions and help to shape the culture in which we live. Become a beacon of light and pave the way with biblically responsible investing. Timothy Plan, where faith and finance collide. Before investing, carefully consider the fund's investment objectives, risks, charges, and expenses of the investment company. This and other important information can be found in the fund's prospectus. To obtain a copy, visit timothyplan.com or call 800-846-7526. Read each prospectus carefully before investing. Investing involves risk, including the potential loss of principal.
Most people have no idea what their money is funding. That's why it's so important to know who you're investing in and what they stand for. At Financial Issues, we help Christians invest with biblical values. Our daily live broadcast covers the economy, markets, and even politics through a financial lens grounded in a biblical worldview. If you're ready to align your faith with your finances, go to financialissues.org. That's financialissues.org.
I found out I was pregnant when I was 21 years old. For me, I was scared, I was shaking. They do an ultrasound, and that's when everything changed. When I saw my baby, and when I heard her heartbeat, that was it. We've seen the hand of God ever since we stepped into the pregnancy center.
To find out how you can support the life-saving mission of Preborn, go to preborn.com/FISM.
Folks, we want to hear from you. Do you agree with what Mark said? Disagree? Find common ground? What do you think? 610-363-1110. Call in right now. If you're on the edge, wondering, I'm not sure if I'm going to be good on radio, just give it a shot. You'll do a great job. Call in 610-363-1110. Ask us your questions. We'd love to talk to you. Speaking of questions, Mark, we got an interesting comment from the chat in light of what you just said there. Lisa in Texas, one of our faithful listeners. Lisa, we appreciate you. Here's what she said, Mark. I'd love to just let you respond to this. So Lisa says, when the market takes a dip, everything is down, no matter how diversified you are. What do you think, Mark?
Well, Lisa, I know it feels that way, but the reality is, excuse me, not so. The reality is, like last week, we saw that technology took a dip, AI took a dip, but we also saw energy up 2.8%, healthcare up 3.9%. Even technology in general was up 0.5%. So even though the markets, some of the markets, because remember it was only the Nasdaq, which is more tech heavy, was down 0.4%. We saw that the S&P 500, that's 500 stocks in the United States, the biggest 500 supposedly, they were up actually 0.1%. So it's pretty flat, but it was still up. And also, here's a little aside, international investments were up last week compared to the domestic equities. So everything's not down. The term market just is a general term to talk about all the stocks traded on the market. Some people use it to say the Dow Jones. Instead of saying the Dow Jones, they'll say the market. Some people use it for the S&P 500 index instead of the S&P 500 index. They'll say the market. Some people just use it so generically that they think that it encompasses everything or only a limited amount. And you have to really know what they're talking about when they say it. When we talk about individual stocks, when we talk about thousands upon thousands of stocks in the market, when some are down, some are up. That doesn't mean, even during the worst crashes that I can remember, something was still positive during those times. It probably wasn't what I was holding, but something was still up during those times. So you have to look at it that way and realize that oftentimes it's the larger, because oftentimes they are cap weighted. So the larger companies, if they're down, you could have like the FANG stocks could be down, and then everything else, or the majority of everything else, up, and it would feel like a flat market because of the weight they have in it. So I think I know what you're saying. Emotionally, it feels like if the market's down, everything's down, but that's not the reality of it.
I'm glad you addressed the real market crashes, too, because that appears to be her main concern in the chat.
Oh, is it really?
She said 08, 09, for example, everything was down. But you're even saying that's not exactly true.
Yeah.
Right. Not everything was down. I'm not saying that the stock market broadly wasn't down, because it was. But there were different areas of investing that weren't, well, I might have to go back and look, but I believe there was areas. Well, even the bond markets came down in 08. So that was a really terrible market crash, actually. Everything, you talk about something like a whirlpool. That one was a whirlpool. It seemed to pull everything in at that point. So I don't know, maybe there wasn't any at that point. I'd have to go back and look.
Lisa's got a good point there, but I think at the same time, it's important to remember this. And Lisa, tell me if you disagree. In fact, anyone can call in and disagree with us if you want to. But
be careful with Lisa, Seth. She's kind of the resident pot stirrer, so she'll find an angle to needle you.
Exactly.
Hey, she had a good point here.
She did have a good point. But here's something, maybe here's a little counterpoint for this. Mark, tell me this. This is kind of a rhetorical question. Which is generally more likely to happen, a market downturn or a market crash, with more consistency?
Well, we're playing with words. It's semantics.
Yeah.
Downturn is just a pullback, a downturn, a dip. Everybody has these terms. What do they mean to you? What do they mean to me? Well, a crash really means the markets are down. They're down 20, 30, 40. And 2008, I had some people call in. I just remembered I had one client call in. She was having a little get together with her friends, and all her friends were down like 60 to 65%. And she called me to say, why am I down that much? You're supposed to be managing my portfolio. And I looked at her portfolio, and she was only down like 12%. And she just didn't believe. I said, you need to go online and take a look at your portfolio, because we were already 50%. Back then I was doing a little more timing of the markets. And so we saw the craziness coming. But anyway, the point is that when you hear the word crash, you're talking about serious downturn, 20, 30%, just really quick. Okay. And then further than that, unfortunately, if there's no reason for people to get back in, if there's no shining light at the end of it all. So a crash is the worst, obviously. A pullback is, for most people, just means it's another dip. It means there's a sector that is correcting itself, that got overbought, and the rest of the market isn't really following it, that type of thing. And a dip is just daily stuff. It happens all the time. You have a handful of stocks over here that pull back, and then they're adjusting themselves, getting back to the norm, realizing that the institutional investors and the bots out there decided that it was overvalued, and they're selling it off to reposition it. And as the sell-off goes on, it regulates itself and starts coming back. It's not a major, we're not in World War III, so it's not going to stay down. We didn't have, any major political or worldwide crisis that is causing it. It's more of just the markets correcting themselves from being overvalued, from people running them up and chasing something and then realizing, oops, we got in and it's a little bit high, a little bit tight. It's time for us to get back diversified again. And as that happens, more and more people jump on getting rid of it, and that pulls it back. So it doesn't cause a crash, though, where it starts pulling in the majority of the market and everybody's panicking and going to cash and going to treasuries or going to gold or something.
Now, Mark, I'm seeing the major bankers like JP Morgan and those guys, they're still describing a correction, but they're saying it could be as much as 20%. And that sounds like a lot based on what you were saying about a crash. So what would the distinction between those two things be, even if they both
that would
could
be a
down
crash
20%?
To me, but I
be
think
a crash
some
for you?
people,
Yeah.
It would be. If the general markets drop down 20%, I would say that to me, that would be a terrible thing. Now, granted, it's not as bad as 2008. It's not, 1999, 2000, 2001, 2, where there was a few serious pullbacks and crashes then that really hurt a lot of people for a longer period of time. So I think when most people think about a crash, they're thinking about 2008. They're thinking about 1929, things like that.
610-363-1110. Appreciate that, Mark. 610-363-1110. Lisa, your question as well was a good one. Hey, folks, join the conversation. We want to hear from you. 610-363-1110. Mark and Sam, elsewhere, I found this interesting. Mark, you had released a statement over the weekend talking about how America's national security will weaken if the Supreme Court strikes down Trump's tariffs. Mark, what did you mean by that?
Well, in the environment we're in today, if you look at what's going on, we have these tariffs, and we have the left wanting to stop him from using these tariffs as a way to regulate the economy, a way to regulate free trade. You see, free trade is really important. Fair trade is even more important, and we don't have fair trade right now with a lot of the trading partners around the world. In fact, we've been taken advantage of, as you've heard Trump say over and over again. We've allowed the world to try and destroy our economy so that we would fit in better with the world's economy. Well, Trump says, no, that's not the way to go. The way to go is for us to control our economy, for us to have a strong economy so that we can help and care and serve the rest of the world in a way from strength. Serve from strength. That's the bottom line on it. And these tariffs are helping to negotiate these things and bring them into alignment where we're not paying 300% tariffs to this country, and they won't even allow our products and services go into their country. So he's using them, and it's the only tool right now that has been successful in the last 30 or so years. Because even when we come up with fair trade deals, like with China, they just haven't honored those deals. So tariffs enforce those kind of deals. Tariffs make that happen. If the Supreme Court takes that away from him, I have no doubt he has a plan B and a plan C as well. But it would really set it back months, if not years, of what he's trying to do to reestablish the United States, its economy, its industrial complex, to be the strongest in the world. And if not the strongest, just strong enough to maintain its own economy and not have to depend on China or Russia or Iran or anybody else, or even if they do what China tried to do recently and take away all the take away the trades that we need from them because we've put them all overseas and shifted all the manufacturing and the mining and everything overseas. We can't be held hostage by other countries. So that's where I'm saying the risk is in all this. And it's a very serious risk. But I do believe that if that does happen, Congress will have to step up, because Congress could actually make it so that these tariffs are enforced. They could create the laws that make that possible. If they don't stand up, then Trump has to come up with plan B and plan C. And I think he will. I'm not panicked about it.
They have multiple backup plans in case these tariffs are struck down. So I don't know exactly what those are, and I doubt they'll be as broad-reaching as the current regime, but I do think they have plenty of plans, tricks up their sleeves, if you will.
That's good.
By the way, as we were talking before we go to the break here, I looked up what the general consensus is on a crash, and it says 10 to 20% down drop very quickly. So a 20% pullback would be considered a crash by some.
Is the speed part of it, though? How quickly it goes down?
It's all semantics. It's all just a way to sell more ads on their news station.
Good reminder to keep ourselves grounded in what's true, right, fellas?
Exactly.
Mark, I appreciate those words a lot. Folks, we want to hear from you. Join the conversation, 610-363-1110. If you have to leave us, hope you have a great day and you'll join us tomorrow. The rest of you, phone lines are wide open. Call us right now, 610-363-1110. We'll be right back after this break.
My wife and I, we moved into this neighborhood. We had some experience with Crossroads Kids Club. We had served at another club. We kind of thought to ourselves, like, it would be really, really cool for us to actually bring in a club that was able to share the love of Jesus with kids directly into the school. And so we started our Crossroads at Hilltop.
Crossroads is amazing. You can learn all kinds of things about God. That He loves all of us. He died on the cross to pay for our sins. That He will help me in every way.
There is just such tremendous opportunity to reach kids in some of these areas that just aren't being reached.
Sometimes I pray every night. When I feel alone sometimes, God is right there sitting next to me. I can rely on Him no matter what happens.
Help reach kids with the hope of the gospel. Visit reachOurschools.com.
Good morning, brother. You're live on Financial Issues.
There's so much I want to say about financial issues. We've been partners since about 2017. We came from a secular mind of investing, had the conviction to change over our portfolio. And since that time, we've been reallocating from a secular to a biblical-minded investment strategy. And with the portfolio asset allocations, it's really made it easy for us to have a portfolio that now works for us. And when there's a sell alert, you guys have been researching for the buys, and so there's always something that is available to us to reinvest in. Become a partner, everybody. Become a partner. I also was paying 1% of my portfolio, and $135 is not even a fraction of that percentage.
Invest without compromise. Go to financialissues.org to get started today.
My baby was like this big. He was like this tiny little spectrum of hope and this unnamed beauty, in a sense. It was poetic. And I saw his heart beating on the screen. And I mean, I went from, I don't want this baby, it's just a fetus, it's just cells put together, to talking to my child on the screen and feeling really protective and knowing that there's life growing inside. I mean, that sonogram changed my life. I went from just Candace to mom. I'm a mom.
To find out how you can support the life-saving mission of Preborn, go to preborn.com/FISM.
Hey, Hey, 610-363-1110, folks. Guys, before we get to what we're going to talk about with the ag report, Sam, you saw some breaking news there about that China-U.S. relations. Can you let us know? Because I think that had a lot to do with what we were talking about in the last segment there.
Yeah, I think this came out last week, but to your point, Mark, getting this from the New York Post, China is now reportedly crafting a plan specifically to block the U.S. military from getting shipments of rare earth magnets. This is while China is reportedly also allowing other U.S. companies to get the magnets, but just not the military. So to that whole national security conversation, you can't wage war against China if they make the bullets, right?
That's exactly it. That's the bottom line on it. And remember, we had a rare earth agreement just a week ago with them. That's the way China plays. That's why we need to build our economy. We need to get our industrial complex back up. We need to get our mining back up also. The United States has resources. We just can't touch them under the laws that have been put in place over the last 20, 30 years by environmentalists and whatnot.
Yeah.
So, and we also need to get more agreements with Australia and other areas that have those rare earth elements that we need. It just makes sense. It's just common sense. And that was gone during the Biden era. That was gone during the woke era, I will call it.
610-363-1110. That's right.
Dark times.
Exactly. 610-363-1110. Hey, folks, really quickly here. So, as you all know, our show, there's so much excitement on the show. We're loving it right now. We're getting a lot of calls, a lot of questions. Because of that, we are going to continue having the ag report. However, we're going to have the ag report on the website. So, if you are a farmer or rancher, we still want to be able to serve you. You can get the ag report on the website or on the app. Today's ag report is live as well. And then once a week, we're going to have an ag report still where Craig talks about some of the more important things happening in the week. So for those of our farmers and ranchers, we still want to serve you as much as we can while also making the necessary time to address partner questions, take calls on the show. So that's what we'll be doing moving forward, just so you all know. So there won't be an ag report on today's show, but later on this week, we will hear one. Every single ag report is still live, though, on the website. So if you're looking for today's, you can go check it out on the website there. Be a great thing for you to do, financialissues.org. All right, Mark, let's get to a question here, shall we? So Jill is asking, hey, Mark, this is from November the 11th, so sometime last week, she says, I rolled over a small workplace 401k into an IRA. I'm a new member of FISM, but I'm totally lost on my next steps. I think I know what allocation model I should use, but I'm not sure how to apply or what to do next. My IRA is with Fidelity, and their page showing my IRA is all foreign to me as well. I know I need to make some choices, and I'm just requesting some assistance. What would you have for Jill, Mark?
Well, Jill, that's a great question. I think you're in the same boat as 90% of the people who are starting to invest for themselves for the first time, and especially with financial issues. We do have a lot of tools under the Partner Hub that you can use. I know you looked at the asset allocation, so let's say that you chose one. The next step really would be to go into that asset allocation and choose a sector. Maybe you want to choose one of the larger sectors, or maybe it'd be easier for you to choose the smaller. Whatever you do, but you choose that sector, and it'll tell you what percentage of your portfolio should be in that. You take that percentage, let's just say it's 6%. So effectively, that means you could buy 2 stocks into that sector, 2 stocks that are of that sector, meaning that they'd be about 3% each, or you could buy 3 stocks at 2% each. We say for a new entry into a portfolio, it's best to not go above 3%. Using 2% is fine too for that choice. Well, now you know that you want to buy 2% of the value of your total portfolio into a stock. Now you go over to I lost the term for it. What do we call that?
You're talking about the portfolio tracker, Mark.
Yeah, the tracker. Right? Yep. You go into the tracker and you look on the buy list there. You load the buy list and you find, and you'll see it's listed by our code, by the symbol that is used on Wall Street. You'll also see that there's a sector. We're sorted by the sector. Go down to that sector you chose and look for 3 stocks that maybe fit not only that sector, but you feel fit who you are and what you believe would be best for that sector. pick a couple of those and then go out to your Fidelity platform and buy that, multiply that 0.2% times your portfolio amount, which let's just say for 100,000, that means it'd be $100,000. Yeah, 2% would be $2,000 per stock. So you got $2,000 per stock. Go in and buy $2,000 worth of 3 of those stocks to fulfill the 6%. And then wash, rinse, and repeat. Go back to the sector, find another sector, do the same thing, and do it over and over. Now, you could do that inside the portfolio tracker till you get it all filled out, and then go over and start making the trades on Fidelity. But I would think if you're uncomfortable with the Fidelity platform, one trade at a time might be a good idea at this point.
Yep. And Jill, I'll just tell you as well, I was in your shoes actually quite similarly. It was a workplace 403B that I was rolling into a Roth IRA. So I was in the exact same spot you were, and I can attest to what Mark said. One trade at a time, you start to get your sea legs under you a little bit. And now it's
keep it simple. Yeah. Just keep it simple.
Absolutely.
And be at peace. One step at a time. You don't have to rush it right now. So the markets are still trying to settle out and figure out what they want to do. So take it one step at a time. Maybe go in and find a sector that you feel comfortable with and buy one stock into it. Just to learn how to use the Fidelity, the Fidelity platform. And here's something most people don't know. Most major platforms like Fidelity and Schwab, they have a customer service number. You can call into them and say, I've never traded on the platform and I want to buy this stock. Can you walk me through how to do that? And they'll stay on the phone with you as you're on your computer, and you can walk through how to do that. So, and every platform's a little bit different, but there's a lot of common across all platforms as well. Jill, just be at peace and take it one step at a time.
Yeah, great job, Jill.
Call right back or whatever you need to do if you need more help with that.
That's right. Yep. You can call us up, 610-363-1110. By the way, for all of you, phone lines open. Give us a call, 610-363-1110. Mark, we've got Brian is 48 years old, and he says, hey, Mark, 2% of my portfolio is in Coinbase. That's MA60. You have spoken quite a bit about the crypto market. Mark, I'm excited for your answer to this question. Should I continue to hold this or sell it? I'm up about 30%. Do you see this stock coming on the buy list anytime soon? What do you think, Mark?
I hope it does because cryptocurrency right now, it's a wild west. It's a wild west of all sorts of depth and width. It's still there, even though we're seeing it mature. We still don't have regulatory authority over it. And most people would say, well, Mark, we don't want regulatory authority over it. But the reality is, for the average person to invest, we need that. We need to know, is the SEC going to regulate it, or is there going to be another organization regulate it? I know there's some people who say, well, once the government adopt digital currency, it'll cause all the others to go away. I don't believe that's true, by the way. So, but we don't know. That's part of the Wild West that we're talking about. I would say, Coinbase is actually the exchange where you can trade many of these different digital currencies on, and it's been around for a while, and it's grown and it's dipped. It's been highly volatile. There's been breaches in their security. There's been all sorts of accusations that didn't pan out. So we want to be very careful with it. Right now, the main reason that it's not on it is because of the legal and regulatory risks. If something goes wrong, if something doesn't happen the way it's supposed to, that stock will drop like a rock. So we don't see it as the same. Well, it's very similar to another stock that we put on took off our hold and put on a sell because of the regulatory and the audits that are going on with it. It's just too much inherent risk at this time. This stock doesn't have any government audits going in saying that they're checking for fraud. This stock has just regulatory issues with it. Until that gets straightened out, I probably won't see it on the exchange. But once they work out who's going to oversee it, then we might see it come on the exchange, and we might even see the price stabilize a little bit more than it has in the past. But right now, we just see it as too much risk, regulatory risk, until right now before we could put it on the buy list. We're just not going to do that at this point and offer it up as if it's another solid stock without that inherent risk in it. We can't do that.
Sure.
We want it to be made of steel.
So, Mark, would you say Brian is safe to still hold it, though, even though he is up 30%?
I don't know how old Brian was, but...
he said he's 48.
You know, Brian, I get what you're trying to do. This is a one of the new technologies, and Coin seems to have an edge in there as one of the platforms to use. If you're comfortable with it, you can hang on to it. It's on a hold right now on our list. So I would say, yeah, go on and hold on to it if you're comfortable with that risk. Who knows? It might get cleared up and come around to you, and we might watch it gain again and again for a while. Nobody can predict the future. So if you're comfortable with it, hang on. If not, sell it.
That's
reposition it in something steadier.
Yep. Thanks, Mark. 610-363-1110, folks. We'll be back right after this.
Are you tired of the chaos? There are a lot of things that make noise, but only a few that truly matter. As a parent, I want to leave something that will last for a long time.
You invest $300 a month increase on slowly by the time you retire.
Not just an inheritance of money, but a legacy of godly values.
Here at Financial Issues, we want to help you grow your money, but our main goal is to help you honor God with the money that He's given you.
Invest your money in a God-honoring way. Go to financialissues.org.
My wife and I helped lead a Crossroads Kids Club, and one of the girls, she said, Mr. Dave, you keep talking about like you didn't really believe in Jesus and you were like dead or something, and then like you believed in Jesus and then you're like alive, and I want to receive that. And so we like just prayed there in our group to receive Jesus and owning this idea of life with Jesus for the first time.
Help reach kids with the hope of the gospel. Visit reachOurSchools.com.
The opinions and recommendations expressed on this program do not necessarily represent the opinions of the station or any of the program sponsors. Additionally, all products or services offered by the program sponsors may not be known by the program.
You know, folks, I wish you could be with us during our off-air conversations in between segments there. Sam was like, it's the last segment. And Mark's like, no, it can't be the last segment.
No, don't want it to be.
That's right. But hey, listen, folks, do not miss out, all right? We got about 11 minutes left in the show. You got to call in. You're going to have to wait a whole day if you don't call in right now. So call in right now. It's a long day. 610-363-1110. We want to talk to you today. Speaking of which, Mark, we do have a call coming in from Rob. Rob is calling from Texas.
Good morning, Rob. Welcome to Monday and welcome to Financial Issues. What's on your mind?
Yeah. Well, I couldn't wait till tomorrow to call.
Wise move, Rob. Good man, brother.
It's a question. I have an inherited an inheritance that has is being managed by Schwab, some stocks and so forth. I'm familiar with them and everything. I'm familiar with it because I used to invest on that platform for my mother-in-law. And I would like to take that inheritance and move it over to Fidelity, which I find a whole lot easier to use, and just combine it and simplify. Is there a best time to move something for simplicity, for end of year statements and so forth? Should I do it in December, or should I wait until January next year? That's the first question. Easy.
Well, that is a good question, though. So often people would change platforms and they'll wait to the beginning of the year. And all that really means is now you're going to have a whole nother year of waiting for statements and 1099s and stuff. If you move it this year and you get it completely moved before the end of the year, then you only have 2025 1099s and your statements coming from the previous platform, and then you'll be done with it. Yeah. So good insight there, Rob.
Okay. The next question. I've sold a stock in a taxable account. I've been moving out of, as a high income earner, I'd never had any Roth, and I was self-employed most of the time. And so I had no Roth money. Everything, we considered transitioning it to Roth many times, but taxes were just, much higher than they are.
Sure.
Since Trump 101. So in the last 6 years or so, I've been trying to get things moved over, and I kind of stay in the 22% range. I'm 75. I'm sorry. And so I'm trying to keep my taxes where I don't trigger Medicare surcharges, and you get the idea. So,
right.
This year, I had 1,000% gain in one stock, and you probably could guess that one. It was a utility stock. And so I couldn't sell it all. I wanted to sell it all, but it would, bump me in a tax bracket or two. And so I'm looking at end of year now. In December, sitting down the CPA because I've got interest income. I've got about half my money out of the IRA. I had a SEP IRA. About half of it's into a traditional or a taxable account with Fidelity. So, anyway, I'm trying to manipulate all this, and it's really complicated when you got all this dividend interest and also standard interest and everything. So I'm going to sit down with the CPA and try to ballpark as close as I can. Is there any other thoughts you have on how to approach that? I haven't had to do that too much. I always kind of knew what my numbers were before.
Yeah.
I've got really weird numbers.
It sounds like it's a little overwhelming, and it can be, but too much is given, much is expected. So he's given you a lot of froth to deal with. One of the questions, or one of the things that you mentioned, is that you had a SEP and now it's a taxable account. You could roll that into a traditional IRA. You don't have to roll it over into a taxable account. So if you still have half of that left over to roll over, if you roll it over trustee to trustee into a traditional rollover IRA, there is no tax consequence with that, getting it out of the SEP, if that's what you wanted to do. I don't know why you would have converted or moved half of it into a traditional IRA or a taxable account, unless you were planning on spending that money right away, which is understandable too. But anyway, so you can roll it over to help there. You also can take a look and, as just part of your portfolio, find out where the dogs are in it, where you've lost money this year, and do the tax harvesting, as we've been talking about for a little while now. You still have time left. You could sell off some of those that have lost money to help offset some of the capital gains, and I know it won't offset all of it probably when you have 1,000% returns on stocks, but it'll help offset those taxes. And then of course, why not, if you can, start a Roth and get some of your growth moved into the Roth instead of keep it in a taxable account. Those would be the things that I'd be thinking about right now. But I think that the main thing that you're doing that is is correct is to get with your accountant and make sure he's familiar with investment regulations, rules, taxation, because although many of them have a good overview, not all of them are experts in it. But if your accountant does understand the rules and regulations, he should be able to help you to minimize all that and give you guidance on how to minimize the taxes for 2025, but more importantly, going forward for 2026.
Yeah, I'm moving money out of qualified money, not for me so much, but to get the government out of it and all the changes that, Roths now have a 10-year payout. Anything qualified, you got to, any heirs have to get everything out in 10 years. I'm actually literally looking forward 20 years hence, because my wills, basically, we'll call it a will for simplicity, is to give money to grandchildren and they inherit it when they're 30, because nobody has a brain till they're 30 anymore. And
I did the same thing in my will. I did the same thing in my estate planning there, Bob. The last bit was to go. The last bit of their inheritance they received, actually, I think it was 30 or 35, but it was after their brain formed. Before that, they could access it for education, to start a business, or for healthcare reasons. Outside of that, they didn't get the money until they were 35. So, or I also gave them, if they spent 3 years in the service or 3 years at a full-time job, then they could get a third of it.
Interesting thoughts. I like those. You need to have a little seminar about that.
We can talk about it sometime. Yeah, that'd be great. Well, thank you, Bob. Yeah, it sounds like you're thinking right, and I love the idea that you are going to meet up with a tax CPA, somebody who can help you to figure all this out. And I do realize that you got to get rid of it over 10 years, and I don't know how many years it's been, but it sounds like you're halfway through it. So take your time, and you're thinking straight and you're thinking right and broad by realizing the impact taxes can have on your Medicare and your Social Security, because they take it out of Social Security. Good thinking. God bless you, sir.
That's awesome, Mark. Thank you. Rob, thanks for that call as well. Mark, I think we might have time to get to a final question here before the end of the show. It's interesting. Okay. So you're just talking about tax loss harvesting, and that's what David is asking about. He's 43. He mentioned several holdings that he has: RGR, FBIN, ALGN, all of those he's holding at losses. Too many more to list than time dealing with. But he's got around $33,000 in gains so far this year and around $12,000 in losses that could be sold. He's wondering, is there any particular way you'd recommend to select the stocks to sell for tax loss harvesting?
Well, I love the idea that he has a whole 3 times more gains than losses.
That's awesome.
Because the way the question started off is like, oh my gosh, your portfolio sounds terrible. But no, it's not. Tax loss harvesting is pretty straightforward. You want to find those stocks that have taken a hit over this year that don't seem like they're going to be turning around or gaining a lot over the next 30 or so days. Those are the stocks that have taken a hit and seem to be staying down or going down even more. So you sell those off. You now take come the beginning of the year, you'll take the losses, and your CPA will take the capital gains and match them up and hopefully reduce your taxes that way. It's pretty simple. It's just part of normal routine this time of year for evaluating your portfolio. If some of those stocks do turn around in the meantime, well, you have the opportunity to buy them back after 30 days. So even before the end of the year, you could buy them back in if you wanted to. You still would have a few days that you could do that, but you don't need to. You take your time and make sure they're solid. They're on the buy list, and you got it. I would sell anything that has caused a loss and do not look like they're recovering at the moment. And I hope that really helps, because tax loss harvesting is worthwhile, and it is good stewardship to be thinking broadly and strategically. God gave us a brain. He says he wants us to use everything to his glory. That includes our brain, and you're using it for his glory by not paying on the Caesar any more than he's really asking for. And that's all part of being a good investor and a good steward and investing with biblical integrity. God bless you all. Thank you for being here today. Look forward to seeing you in the morning.
If we ever forget that we're one nation under God, then we will be a nation going under.
Thank you for joining us. This has been an FISM production.